Hello everyone, how's it going? In this video, we will talk about Mullen, trading under the ticker symbol MULN. Mullen has been a very interesting company to trade recently, with high volatilities and also many projects that may fuel future speculations. At the same time, it's a company that the market tends to not trust too much with the capital, especially when it comes to long-term investment. So, in today's video, we will go through the latest fundamentals, the price actions, and my analysis, as well as recommendation to hopefully see what is the best course of action to carry out regarding Mullen. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description, as every help is greatly appreciated. Over the past 5 days, the price action of Mullen has been mostly stable, currently pricing at around 8.6 cents. It is around 8% down compared to where it was 5 days ago, going from 9.3 cents to 8.6 cents. Now, in my opinion, this is mostly something that is normal and should be viewed as a regular fluctuation for a stock that is waiting for additional catalyst and for the time being floating in the unknown. In the meantime, it peaked in the short term at around 11 cents on April 24th, which marks a significant attempt in scoring higher, but ultimately fell back down. For the time being, things remain constant. As far as Mullen is concerned, it's a bit like the calm before the storm, and I believe that the 10 cents level is still mostly held. Of course, things are relatively challenging or dim for a long-term, from like a long-term perspective, with the stock tumbling by more than 80% over the past 6 months, going from 54 cents to 8.6 cents now. The main reason behind this recent price tumbling is certainly because of the lack of trust and faith in Mullen as a company, and the doubts cast over its capacity to make the ends meet, and also to prove to the market at large that it is a company that deserves to have long-term trust. For the time being, they haven't really demonstrated any of that. But with all that being said, I'm pretty convinced that most people who trade Mullen are not really aiming for long-term growth. We're not playing Warren Buffett here, but we're actually just aiming for short-term gains. It doesn't really matter if Mullen will be able to produce EV cars on massive scales in the future, as long as the company continues to pump out what we call volatility, which is able to attract retail money in order to provide liquidity for other retails to go out. With that being said, the current level seems to be a floor for what's coming, and that the willingness to keep pushing it down seems to be dwindling, which makes a lot of sense, because at 8 cents, how much further do you think that it can go down to? Mullen is a publicly traded company operating in the EV sector, and it is listed on the Nasdaq Stock Exchange. The company designs, manufactures, and sells a range of electric vehicles, including car, buses, and trucks. One of the key factors setting Mullen apart from the EV sector is the focus on developing long-range electric vehicles. M115 is a long-range electric truck that the company is trying to develop and eventually to manufacture. It has a significantly longer range than most other vehicles currently on the market, making it an attraction option for people who would like to invest eventually in this massive potential success. Another thing is that they are investing in developing heavy-duty electric vehicles, such as buses and trucks, designed to handle heavy loads and perform demanding work. This is a unique offering in the EV market, where most other companies are focused on developing cars and light-duty vehicles. In terms of financial performance, however, the company has been having a hard time generating income and consequently digging itself a large financial hole that they have to fill every time with further dilution. In terms of the long-term price action trends, despite the recent upward momentums such as IGO distributions, the company has been having a mostly bearish trend over the past 5 years, first trading between $5 to $10 peaking at 15, before finally falling back to below $1. What this suggests is that Mullen has been hard hit by not only the market downfall, but also its own fundamental weaknesses. This assessment recently begun to change, but I would say that it hasn't reached a convincing turning point, and that to a point, it still explains why Mullen is a stock I would recommend to trade instead of investing in. Regardless of the recent distribution contract or the short squeeze potentials, the short interest surrounding Mullen remains real, and that the interest surrounding Mullen, period, remains the expectation to scalp a quick gain. With that being said, I also want to add that things can always change within this sector. So if today I say that Mullen shouldn't be a stock that you invest in, maybe 6 months from now things could be different. The online communities have been initially skeptical towards Mullen. Nowadays, it's mostly something that follows the trend. So for example, if things are looking good, they will find the positive aspects of Mullen and to say that, you know what, this is why it's been going well. Or if things are plummeting, they're going to say, well, you know what, like such and such reason is the reason why they're doing poorly. And you will also have a small group of fans who will always find reasons for optimism, regardless of how desperate sometimes the situation may be. As far as their online footprint is concerned overall, the biggest factor to consider is whether the price action gives people enough motivation to have a position in Mullen. The other factors have sometimes served as a pretext to buy its shares, but more often than not, the price action has already sent that price signal to the market to react positively. On top of that, the macroeconomic trends affecting the sector have also been putting pressure on the stock price, including the increase of interest rates, the capital flight from growth stocks to other sectors, the conflicts around the world, the supply chain issues, and the expectation of a demand that will be softer than usual. And this is going to continue over the next couple of years due to a recession. Another factor to look at is how the flagship company in the sector, so in this case Tesla, has been doing. The EV sector being a relatively new industry, a lot of it is still in development, including the investor's mentality. People often determine whether they want to buy EV stocks based on how Tesla has been doing recently. The idea here is to profit from a sector-wide gravy train conducted by Tesla, pulling all the other ones behind it. We have seen on multiple occasions how the share price of a company like NIO, Lucid, XPeng, or Mullen follows similar trends compared to Tesla. Of course, Mullen doesn't always follow the trend, but it has played in its favor, but also the other way around. So we have to be mindful of those factors because they will definitely paint the picture of the surrounding environment in a specific direction. With that being said, let's also take a look at Mullen's financials, which might give us some hints about the decisions that the company has to take in the upcoming periods. One thing to note about its financials, it's not generating income for the moment, but we know for a fact that they are currently distributing iGos in Europe, so this will eventually change with the upcoming reports. The other issue is the cash reserve. So I personally believe that Mullen is a company that has to rely on continued capital injection by selling its equity to continue its going concern. This is concerning to say the least, but in my opinion, this is going to continue for the foreseeable future. In other words, the retail interest has to be significantly larger than the dilution that will be announced in order for us to make money. So like I said before, the fundamentals don't necessarily help Mullen. They are currently a dead weight that will eventually push the price down. But if we rely on qualitative factors, things that are beyond the immediate reality, but if we project the company to a brighter future, then it's possible that a large number of people might pile in and buy the stock up. This is the kind of behavior we're expecting to see if we decide to invest or to trade Mullen. Because in terms of trading, Mullen actually has a very good shareholder structure. So they have a mostly retail shareholder base. And what this means is that they will be far more volatile than typical stocks. Of course, I know that BlackRock recently increased their holdings, but this is not doing it for me. That alone doesn't mean much, personally. So, the lack of significant institutional participation means that I personally don't want to put money in for the long term. The key behavioral difference between institutional and retail shareholders is their investment horizon. Institutional buyers tend to stay for longer term, with years or decades as the measurement, whereas people who are in as retail, they tend to get in and out very quickly. Sometimes after a few days or weeks, they might already be gone. So, the short squeeze seems to be the massive catalyst that we are dealing with at the moment, and this is something that can present excellent opportunities for us. So, currently, there is a significant position, around 40 million shares, that are being shorted against Mullen. The majority of them are traded outside of public exchanges, so therefore by institutionals. The potential of the short squeeze in this case is significant. The short squeeze is a phenomenon that is observed when traders decide collectively to buy up the price of a stock, forcing those who are holding the shares to redeem them. The reason why they may have to do this is because they want to avoid further losses. So the redemption would act as a further wave of purchases, pushing the stock even higher. So it's important to note that regardless of how many stars are aligned on paper, the short squeeze itself may never happen, just because there are a number of factors outside of anyone's control that will determine if the short squeeze is something that will occur. Now, my personal recommendation for Mullen is that you should buy a significant portion of your allocated amount in Mullen now, should you decide to buy it. And the kind of people who should buy Mullen would be the people who are very risk tolerant and who are comfortable with the fact that Mullen is a company that maybe at times or at many times can be considered as a relatively dodgy company. Like, if you're comfortable with that, then I would say that yes, the volatility is something that you can play with. Now, I would say that the maximum exposure to go with would be within 1% of your portfolio.